How's it going, everyone? It's Sam. I am amazed today because I saw this happening last night with one of my later videos, a lot of people subscribing, but today I woke up, we're at over 500 subscribers, about 510. I just want to say thanks to all the new subscribers, thanks to all the old subscribers, thanks for all the future subscribers. I am amazed that I've been able to hit 500 subs. I did this for a year to a year and a half when I only had about 10 subscribers, and I wasn't pushing out content like I am now, but I'm just still flabbergasted with how many subscribers have been joining our channel here. So if you don't know, I'm investing $5 for each new subscriber. I want to do something a little bit special, which is $500 invested this week and $500 invested today because we hit 500. Let me know what you guys would like when we hit 1,000 or even 750. I invest $5 more, so we were at 365 before. Now we're at 465. I just wanted to do 500 at 500. So still need to invest a little bit more to get to where we are now. But let me know if you want me just to do like 750 at 750, or if you want to see like where I shoot, I guess, or something. If you have any questions, let me know down below, and I will definitely take it into consideration for those videos. But today I want to show the 3 stocks that I am buying, and if you haven't already subscribe. That way you can add $5 to the next investment. But I am buying 3 different stocks today. One I've never bought before, and I've wanted to for years now, but I just couldn't rationalize it in my head. But I'm going to go over those 3 stocks. I also want to look at my portfolio in general real quick before we start those 3 stocks, because I want to go over the cost basis that I bought a lot of my stocks at and look at it versus the general S&P 500. So let's get right into it. Alright, so this is my portfolio. So if you ever look at my portfolio, these numbers aren't correct here. So the 6.81% and just all of these, if I go to anything longer than like the last week, because I transferred a different portfolio in here and then it resets the cost basis. If you look in the individual stocks though, each individual stock has my correct cost basis. But as you can see here, you can see I'm positive on almost every stock except for Delta and Carnival. And Carnival is actually pretty close. It was right at the cost basis earlier this week. But you can see here $260 gain, $300 gain, $17 gain, $200 gain. And overall, I have about $1,200 in gains here. So about 11%. And some of these, I have a huge gain. I have a 50% gain in Wynn Resort. I have a 30% gain in Facebook, and a 27% gain in Foot Locker. And this doesn't account for the dividends I received, and I've only really received 1/4 of dividends, but it would be an even higher gain in each of these stocks if you included the dividends. Now look at that compared to the general S&P 500. So I started this portfolio on March 5, and since then, the S&P 500 is up 0.2%. So I can't compare it exactly to the S&P 500 because I bought throughout the entire dip in the S&P 500. So I would have gotten a better return than 0.2%. But I think that kind of shows you that it does pay off to invest in dips as long as you're smart about it and you realize that it might take a while to get that back. You can't just assume that will go up in the next quarter, the next year, the next 5 years even. So just know if you're investing, it's for the long term. But it's kind of cool to look and just see, okay, I created $1,300 out of thin air essentially, just through some mental toughness and reinvesting. When the market kept on dipping down, I kept on investing more. So that's cool, and I just wanted to go over that real quick before I go over the stocks that I'm buying today. But I invested $500 this week, and I want to look at the 3 buys that I have. So the first buy on here is Tesla. And I've wanted to buy Tesla for as long as I can remember, that I've been interested in the stock market. And the reason I didn't buy it before now is because I thought it was too richly valuated. I thought it was too expensive, And I want to buy it when it was 300 and even 350 in the dip, but I wanted to wait because I thought there were a lot of other good deals in the market. But as you can see here, it's up over 100% since it reached 350. You can see here it was well below that a while ago. It was around 200, under 200. 5 years ago, it was around 200, 150, something like that. Then at the beginning, it was only $30, less than $30 per share. And I felt like it was too richly valuated. So I didn't want to buy it. I feel like I'm more of a value investor. I invest in companies that I feel are at a discount and provide some value, whether it's through some dividends or just they earn a lot of money or they're at a good price to earnings ratio. And, you know, Tesla is not at a great price to earnings ratio. But a lot of people feel really good about Tesla, and they have kind of a cult following where some people are saying that the stock's going to go to 7,000 in the next 5 years. Some are saying 15,000. Some are saying 3,000, And I realized yesterday, if I buy some at, let's say I buy $500 at a $500 share price, so I get one share. Okay, is that more important to get at that $500 price point, or should I just invest $1,000 when it's 800? And if it goes up to 3 or 4,000, it's not going to really matter when I bought in as much as how much I bought in with. So if I 3x versus 4x my investment, it matters more whether I put in more money or less money. So I kind of realized that. The other thing that I realized is with some of the great stocks, and I'll say I got some of this information from Financial Education's channel, but if we look at Amazon, it's always been richly valuated. And if you look over the last 5 years, let's say, it's been expensive all the time. It doesn't go down for more than a month. So some people are probably thinking, oh, this is really expensive at 400, and then it goes up. It's at 700. It's like, oh, that's really expensive. I'm not going to buy in there. Oh, 900. Now it's too expensive. Okay, 1,400, 1,800, 2,000. Okay, it dips down for 6 months, and now it's back at 2,000. And now it's at 2,400. Like, you can rationalize it, but if they're growing fast enough, if they have enough potential, they're just going to keep growing. Like, there's no time where it seems cheap for some of these growth stocks. When you look, it's almost a straight line exponentially there. So I'm just really excited about Tesla. It's not just Tesla cars. I've talked about this on some other videos, but they have battery technology that will be huge because it will power many more things than just their cars. They also have solar roofs. They also are going to have subscriptions, possibly in their cars for music and apps. They also have some awesome technology where they can send out updates that just download to your car like they are software updates. Like, you know how you get the pop-up on your phone or on your computer to install the latest Mac OS or something like that? They have that on Teslas, and it increases the range with which they run. They've also been able to decrease the price of cars recently, so they're being able to become more efficient. I think the Model 3 decreased by $2,000, and then their two higher-end cars decreased by $5,000. They also have semi-trucks, so they're going to get into that space too. I just imagine they're going to explode over the next 5 or 10 years. The electric vehicle market's going to grow so much as they're able to kind of grow their users and the charging stations throughout the United States. That's one of the problems that a lot of people have around where I am right now is they're like, well, what if I go on a trip for across a couple states and then I have to stop and fill up and I don't have gas there? And I just think, okay, well, how often do you actually go 400 miles away? Most of us just go 30 to 40 miles in a given week to and from a certain location. So I'm so excited to be able to buy it, even though it's just $300 worth. I think that Tesla is one of those companies that I'm just so excited about. I don't have to worry about where the price is day to day. It could go down to $200 tomorrow, and I'd be buying up everything that I could. So I think that they're just a company that I'm going to be able to sleep easy at night, and I'm going to buy more of them in the future. Now, I also bought Facebook. I've talked about this, I think, pretty heavily over the last few weeks. I think that they have a really good opportunity to grow. They've been growing at 20 to 40% over the last few years. They hold a ton of cash. They're talking about being able to have their employees work from home, so that's going to save them a lot of money in overhead. They also just talked about Facebook Shops, and they're going to be able to really monetize that and have businesses sell directly to consumers through Facebook. So I think that's going to be huge. I think that they said that they're going to be able to make between 30 and 70 billion over the next 3 or 4 years with Facebook Shops, and that will increase their revenue from 70 billion up to 100 to 140 billion. So that's just a lot, and that's not including all the increased revenue from the other sides of their business, because they own Instagram and Facebook and WhatsApp. And I believe WhatsApp, which has over 1 billion users, really big outside the US, I don't think they're monetized at all. They're like a messaging app, and I think that they could probably monetize that somehow, maybe just with an ad at the bottom of the screen or something. But that is a huge potential revenue stream. And then they also have been able to increase the amount of money that they're getting for each person on the app, and they've also been able to increase how many people are on the apps. So like on Facebook, they're growing their market share, they're growing their customer base every day. So I'm really excited about that. Also, I bought Realty Income, just $100. I would have bought more of Facebook and Realty Income if I wasn't buying Tesla, but I want to buy Realty Income because they have triple net leases. So those are 10 to 15 year leases. They have really high quality tenants in those leases, and they're a monthly dividend paying stock. I think that they are going to do really well over the future. And if we just look at their stock chart here, they've dipped down still a lot from their highs before. They were around $80, now they're $55. So about a 33% decrease. Their dividend yield is around 5% or just over 5%. So that's pretty exciting. They are a very stable company. They've been able to pay out dividends for a long time, and I think they're going to continue that in the future. And I just wanted to add to my position there. So I don't even care really what the cost basis is on these. I'm not even going to show you it because they haven't gone through. But I feel like all these companies are companies that I'm going to be able to set and forget and just be comfortable forever owning these companies. And I think that they'll just continue to grow. Realty Income will continue to pay dividends. Facebook might pay dividends at some point. And Tesla, I just want to keep on growing. They're only selling a small amount of cars right now compared to what they'll sell in the future. And I think that they'll continue to gain market share. And also with them too, they're so far ahead of all the other electronic vehicles. Like their lowest end car is maybe 250 miles of range. And every other company is struggling to get to that point. Also, Tesla comes out with the new model, I think Y or X or something like that, this year, which is one of their bigger cars. And then they're also talking about the Cybertruck in the next few years, which I want a Cybertruck bad. If I ever start making some really good money, 6-figure money, I might buy a Cybertruck. So again, just let me know what you guys think of these stocks and what you want me to do when I hit 750 and maybe 1,000 subscribers. Again, thank you to everyone that's been joining. Please hit the like button, hit the subscribe button if you haven't hit it before, because we are growing like crazy, and that way you can continue to get all the content that I'm throwing out there. I'm throwing out stimulus content, investing content. So I appreciate it, guys. I will see you in the next video. Thanks.